Buy. Singapore property market will continue to go up. Don't worry. Sound familiar? The more people say this, the more I kiasi and ought to be more careful. Still remember 2013? Many were wrong. Want to avoid this biggest mistake today?
So the big question is this: how busy professionals and homeowners like us make six-figure profits from the property we own safely by doing it with research, data, and numbers. How do we buy in a way without complications and half-guessing, regardless of the market conditions, and still remain profitable? That is the question. Here, I will share with you exactly what we do and how we do it. My name is Edmund Tan, and welcome to Singapore Real Estate Insider.
History usually doesn't repeat itself. It will leave breadcrumbs for us to pick up and learn from actually. So what are the breadcrumbs we should be looking for here? In this video, I will first show you what relation the last peak of 2013 has in today's market. They are quite similar to think otherwise. Second, I will show you examples of the wrong types of property we always fall into during an upward trend market and what we can learn from them to avoid hundreds of thousands of dollars mistakes today. I will even pull out our research live tool and do an analysis on the spot review to show how we consolidate data to help us in our decision making that you can also get access to in our consults. Lastly, I will give you a breakdown of my projections for 2024. Which region should outperform the others and what type of property you potentially can look at to achieve growth of more than six-figure gains. Hello everyone, Coach Edmund Tan here. Don't forget to leave a comment, give this video a thumbs up and subscribe to our channel. We want to continue to grow so that we can add more education value to you. So help me out, okay? Now let's go back to 2013, the most recent peak in real estate prices. Why? Because I will show you the relation it has and the impact in the market of today's time in 2024. You want to watch until the end what it will unfold so you can make better decisions about what you should be doing for your property. Now, the most recent peak in real estate prices is remembered as a turning point in the industry's history, categorized by skyrocket values, unheard of speculation, and a subsequent market correction. Property values increased quickly during 2013 due to investor confidence fostered by economic growth. Property owners witnessed the growth of their investments and investors seized similarly endless chances. However, vulnerabilities were hiding beneath the surface of this boom. A sharp decline was anticipated because of economic imbalances, inflated prices, and unsustainable growth rates. Ultimately, the bubble burst, sending shockwaves through the market as investment soured, prices fell, and the once calm market environment became erratic. Let us go back to 2013, the most recent peak in real estate prices. When prices are rising, I have noticed an intriguing trend in people's behavior. People start to become overly optimistic and bullish, thinking that prices will continue to rise. For this analysis, I am looking at what happened to buyers who entered in the last property peak in 2013. I'm going to analyze the results of buyers who bought a resale property that has preserved to be undervalued and compare against a new launch that was happening nearby. To make this comparison more interesting, I'm going to compare the results against the worst performing new launches that I know of. And in my last example, I will show you a tool that we developed for the past many months that is able to directly give you access as a homeowner to start relying on data and numbers to make decisions. I will show you live in my last example, so continue watching. I'm not going to compare against the best performing new launches of 2013 because that would be too obvious. Warning, I'm sharing with you data about some of the most unprofitable condo developments in Singapore. If you are feeling concerned your condo is in this list, please do not proceed. Subscribe to us if you have not done so. It will help us a lot. Thank you for your support. But I'm going to compare against the worst new launches of 2013 that I am aware of. Do you recognize this in the past? Compare the recent launch, the Skywoods at Dairy Farm in 2013 and completed in 2017 to the neighbouring resale property, the Tree House, slightly older properties completed in 2014. In contrast to Tree House buyers, who may have lost up to $235,000, Skywoods buyers in 2014 lost roughly $8,000 by 2018. New launches are often associated with profits, but that is not always the case. But at least this is still a safer choice versus the older tree house. Here's another example, the Rivertree residences, a pricey new development at about 1,100 plus per square foot in the Sengkang area. Debuted in 2014, but Seletar Springs was offered for such a much lower price in the resale market. You can get Seletar Springs for 800 plus per square foot, and some can go as low as 700 plus. 1,100 plus to 800. No brainer which to choose, right? Seletar Springs was considered an undervalued property then. In spite of this, Seletar Springs unit continued to sell for less between 2019 and 2021, while Rivertree residences experienced no unprofitable sales during that time. And even till date, Rivertree residences are seeing no unprofitable transactions. Even for those who bought at a peak of 2014 at 1,100 plus per square foot. Take note that for all these transactions, it is exclusive of tax and cost involved. These are purely buying and selling prices. Like what you're watching so far? How about giving us some likes and love so we can continue this journey of empowering more others like you with families like yours to learn about property and bridge the knowledge gap. Next, Ascentia Sky, TOP in 2013 and LX Residences launched in 2014 at Redhill MRT offered an additional compelling example. While unit at LX Residences purchased in December 2013 lost only $3,000 when sold in 2021, a unit at Ascentia Sky purchased in November 2013 was sold at a loss of $85,000. The more expensive LX Residences outperformed the undervalued Ascentia Sky, even though they were next to each other. Does this even make sense why this is happening in the first place? It does go against what we normally understand when looking at property, right? A tip here, we should not look at if the property is cheap, undervalued, or too high price, expensive. The keyword is growth. A key criteria when we advise homeowners to look out for in their property search. Without this, your property will likely have the same situation as the examples we showed, as data and numbers cannot lie. Let me show you from a chart perspective. Finally, purchases of Optima at Tanah Merah completed in 2012 and Urban Vista completed in 2017 suffered sizable losses. By 2020 and 2021, owners of Urban Vista who purchased in 2013 could have lost anywhere between $94,000 to $216,000. Owners of Optima suffered even greater losses, up to $430,000. Both Urban Vista developments were unprofitable, demonstrating that undervalued properties can still incur large losses. Of course, you will say, Coach Edmund, all these prices would already have increased in value based on today's 2024 market, right? I totally agree, which is why this is a very scary situation for many homeowners who are not informed and not relying on research data and numbers to make decisions. You could be making the biggest mistake ever in your property purchase if you are looking at the wrong set of data. Now, that's why you want to say subscribe and follow us on this channel. Click on the bell for notification because I am going to do another video on why the last pick is a smoke screen and you are falling into a big trap. You don't want to miss this video. Now let's come back. Now, what are the factors that contributed to the market's decline following its peak in 2013? Well, a series of cooling measures before 2013 was introduced that resulted in an immediate decline that went on for 15 quarters at a drop of 11.6%. Where were you when the measures were introduced? You will have recalled some of these measures that were in place before. Number 1, ABSD. There was also the LTV ratio adjustments. How about TDSR? A new thing, seller stamp duty. First up, ABSD. Rates for all buyers were increased by the government for ABSD. The loan to value ratio adjustments, which means high percentage loans are now more difficult to obtain due to the restrictions in LTV ratios. The total debt servicing ratio. This is to prevent borrowers from overextending their finances. Seller stamp duty. To discourage short-term property flipping, the SSD period was extended to 4 years at higher rates. If you are new to this channel, hit the subscribe button now so you can get real-time updates and learn how to make wise investments for yourself and your family through properties. The situation did not improve when there was an increase in supply of new launches in the pipeline. Is this familiar to you if you're based on today's market sentiment? Hint hint. My friend, what is going on now has happened before. I was in the market back then. I've seen the struggles before to sell properties when there was very few takers. Now, when we see the market continue to rise, we feel optimistic, sometimes even invincible. That's why I'm reminded of the need to be cautious. In hindsight of the current situation, don't you think that now it's more difficult to acquire a property in comparison to the past since 2013? It's getting harder and harder with new policy implemented that seems to want to prevent us from owning a property. Do you have the same thoughts? Share in the comment below. But when we were in the past, we also were concerned about how the cooling measures are going to affect us, correct? It's a unique situation for home sellers and buyers alike. When the market is against us, we want to wait for better times. But when the market is in our favor, we are concerned it has been heated up and want it to drop before we re-enter the market. Seems like a mouse running in circles in his own world, don't you think? It is critical to exercise caution and think about long-term effects as we negotiate the current situation in 2024. Keep in mind that past performance does not guarantee future success and that the market could always turn against you. Provided of these events, what measures will you take in the current market to protect your own real estate investments? Taking learnings from 2013 last peak as well. Are you planning to buy a property this year? It is projected that there's going to be a calming down in the Singapore Property Market Index in 2024, despite market concerns about a decline in property prices. But while there is a calm effect, there are also opportunities presented themselves when we will have dived into the research to guide homeowners in their first step to making six-figure profits in their property safely using data and numbers with the REI method. No guessing or I thought, I think, or who confirmed the situation. Remember to look for growth criteria, not just cheap properties. Studies have shown across many things, cheap things are never good. Even though it's anticipated that demand for luxury property goods would decline, particularly from overseas consumers, changes are occurring in other markets. Property types that are becoming more popular include executive condominiums, suburban condominiums, and resale HDBs. Why? Because upgraders are entering to help these markets, particularly the bigger ones. So if you're thinking about making a move, keep an eye on these segments. Now, what can we expect this year? Singapore's economy is expected to continue growing steadily throughout 2024, and this economic stability has significant implications for the property market, as also supported by home occupier demands. Since buying a home is a significant financial commitment, consumers will be well served by exercising caution, particularly given the recent surge in prices and the ongoing increase in interest rates. Homeowners encouraged by a strong economy might not feel pressured to reduce their asking price to facilitate quicker transactions. This means that property prices could remain high, posing challenges for some buyers. With high asking prices and interest rates, some potential buyers might find themselves priced out of the market. These individuals may need to explore more affordable yet still valuable options. One notable trend is an increase in buyers' interest in properties within the OCR, particularly those close to MRTs. As such, this trend is expected to continue in 2024 as buyers seek out these strategically located, more affordable alternatives to central properties. As we look ahead, it is clear that Singapore's property will be shaped by a blend of economic stability, strategic buying decisions, and the evolving preferences for both homeowners and investors. The sustained growth of the economy provides a supportive backdrop, encouraging confidence among buyers and sellers alike. There you have it. Singapore real estate economy are pointing to an interesting year ahead. We've covered a lot of grounds today, including the dynamics of the real estate market and the most recent economic trends. I'll be interested in knowing what you think about these developments. Do you believe the market will keep rising, or do you see any upcoming difficulties? Please share with me your thoughts and questions in the comment section below. For personalized advice or more details, don't hesitate to reach out to me. The QR code is somewhere above. By subscribing to the channel and giving this video a thumbs up if you thought it was informative. Hit the notification bell to be informed of our future videos weekly, because we've got plenty more exciting contents ready for you.